Hi, welcome to the Market Alert for Monday, the 30th of January 2017. So Friday, wow, quiet or what? I mean, the range for Friday's session, what have we got? Around 41 points, something around there. Is that a lot? Yeah, 40 points. The market didn't even manage to get to the scalp target level that we see here. So as I said in the message, the market was going to remain sideways and just to take whatever you could get off the table, because we are in this consolidation phase at the moment. You can see this in the daily chart. The market's been sideways for 2 days. The volume's dropping off here, but we're going to look at the real volume in just a moment. So price is sideways. The euphoria of the first week of Trump's as President of the United States has come to a close, signed lots of executive orders, and the wheels are in motion. But of course, none of what he's done is going to really see any benefits until at least 9 to 12 months. And that's a long time to wait in politics. They always say that 7 days is a long time. Well, 1 year can feel like a lifetime, there's no doubts about that. News-wise, let's have a look at the Forest Factory, because that's where we're going to get the news from today as I'm recording on a Sunday. So Monday, nothing major, pending home sales at 3 p.m. Draghi's out on Tuesday at 8 a.m, so that's before the market opens. Wednesday, we actually see an FOMC statement, but this of course will be for December, what happened in December, not January. So I don't know how the market's going to react to this. The rate is going to remain unchanged according to the forecast here. We've then got Thursday Bank of England inflation report, MPC official bank rate votes. Let's have a look later on in that day. President Draghi speaking, Carney speaking, and yet again no sign of Yellen. And Friday, what have we got? Absolutely nothing. Evans is speaking, but no sign of Yellen again. And then we've got the non-farm payroll figures as well. So again, difficult week to call really, to see how the market's going to react to what it's doing. I would imagine that we're going to see a bit more sideways activity here. On the implied volatility, well, 8:15, 27th of January, markets put in a new low. And what I thought I would do in this edition of the Market Alert is also give a more in-depth look at the implied volatility and what this 8.15 figure actually means. So starting off with a 3-month chart, these are ones that I've compiled myself, which you've seen before. And you can see there 8.15, the implied volatility has just been dropping as the market's been sideways. In the 6-month chart, you can see how the low in August was taken out. When we got down to these levels, we had a 1,000-point drop, and the market then traded sideways till we had the election out of the way. And then the 1-year chart, again, you can see we've broken the August low. We've not had a low for a while. And if we go to the 2-year chart, you can see how dramatic this is now, where the market's taken out last August low, and also lower than August of 2015, when we had a 2,000 plus drop in the underlying market. So we know there's a big move to the downside coming, purely and simply because this has always worked. It's never really failed. As I said before, even if you get to 12% and below, and the lower this number goes, the more likely you are going to get a correction in the underlying market. The lowest for the last 10 years is 7.90, which you can see here. This is on a 10-year chart of, this is the 2014 chart, not the 10-year chart. The 2014 chart, when this occurred, and then again you can see the market was really choppy, and then eventually it had to give way. You can see how they kept bringing the market back, and then eventually it had to give way, and we saw the market drop over 1,000 points before it found support. Doubling of the implied volatility, the market starts to move up, the implied goes back. We reach just through the top of the previous high, back down below the 12, down to 8.54, and then we get another major correction here of a couple of thousand points, and we then see the implied volatility go to 100%, and then we see it come back below the 12 again, 9.28, again another correction. So there's a consistent pattern here. It's just that you can't time the days. You just know that it's actually going to turn up there. And then finally, in the real Dow volume figures, you can see that these are dropping off slightly. There's a bit of a tapering off, but we are in a sideways move. What this also indicates, of course, is that there's no new buying coming into the market to move the prices higher. So it can be viewed that way as well. In the weekly chart, you can see the volume is still high. It's still high here as the market is consolidating. You've got this breakthrough, but we know we've had 2 days where the market's been sideways. So even though the volume is high, it also indicates that there is some selling in the market as well, because it doesn't continue to drive to the upside. And what is even more telling is the monthly chart. I'm just going to bring this over, widen out the bars a bit. I'm also going to put on the data window and also grab some crosshairs. So in December we had 5,231,000 shares, and so far, if you look at the range of this bar, it's narrower than December, and we're already up to 5,191,000. So you can see the pros are definitely offloading. We've had confirmation of this with the Zero Hedge article, which I brought to your attention last week, where the banks and the big boys are actually selling and offloading their personal holdings within the banks. So again, we've got this situation where it's all setting up nicely. It's just a matter of having the patience to wait for it to start falling apart. And because we're dealing with something that is a unique situation, Trump's in, much to the irritation of a lot of the elite in the establishment, and they'll be quite happy to dump this lot on him, but let him have his honeymoon period first, I think, is what we're seeing here. Right, that's it for today. I will report in on Monday if I see anything before the market opens, of course. And other than that, I will see you in Tuesday's Market Alert as ever. Thanks for watching. See you in the next one.